Okay guys, so looking at this trade here, this trade of it is gold USD. So I want to show you something guys, that okay, we've been trading this trade. I think this is the second week. I think even all the previous webinars, we've been analyzing it also. So there's something that I just want to show you guys. There are these marks here, the second target, first target if buyers come in. So basically the move, it started somewhere here that okay, I was looking for a sell here, and our target was here, and indeed it reached the target. Then our second target was here, but then recently, okay, yesterday we sold it yesterday somewhere here, and today we are buying it here. So you can see that we took almost like 5 trades in 2 weeks in the same currency pair, in the same pair. So meaning there is a clear follow-up in our trading. You see, we are not just trading without following up the market, because there are some people who will open a buy today and tomorrow they open a sell. They forget even that yesterday we opened a buy. They forget even that thing. So it makes your analysis and it makes your trading to be very weak. So when it comes to your trading, you really need to have a follow-up. That's why if you can see here, these are the only pairs that I have. Meaning these are the only pairs that I am trading personally, not like I'm forcing you guys to trade these pairs, but me and the guys who are in the allied community, these are the only pairs that we are trading. You see, so this small number of pairs, it gives me an advantage to pay focus, to have a relationship with each and every pair. It gives me that advantage to say, okay, I know what is happening in Bitcoin, even if I'm not looking at the chart. Even when I wake up in the morning, I know what I'm expecting in terms of gold. For an example, you see, as we bought it here today and we took our profit, our first target was somewhere here, and then my second target was up there. So we took the profits here. What I'm waiting for another buying opportunity. You see, even when I sleep, I know that when I wake up tomorrow, I'll be looking for a pullback, then I'm entering a buy. Obviously, the main level, it is this level here. It is this level of resistance. That's the main point that I'm looking at right now, that okay, I'm waiting for price to pull back and I'm buying. So you know that tomorrow when I open my chart, when I open gold, I don't open gold like someone who say I'm going to be looking for a selling opportunity and a buying opportunity. I'm just going to be waiting what the market is going to give me. No, I know that I'm looking for a buying opportunity, because I know that now the momentum has almost shifted to the upper side, because we have now a new low which is higher than the previous one and a new high which is higher than the previous one, meaning now it is no longer seller's market. So that's something that helps you to select your trades carefully and to have a good eye to select your trades, to have a follow-up with the market. Don't just trade today and then after you close your trades, you don't care what is happening. You have to have a follow-up. That's why you do not have to erase your analysis now and then. You can see we've been analyzing it long ago and I've never erased my analysis. Why? Because I have a follow-up. It helps me to know what I'm doing next, what I've been doing yesterday. So trade selection, it is also had something to link with being careful of following up your analysis with your analysis. So let us further discuss. So okay, the main important thing that you need to note, guys, for you to select profitable trades, the main important thing is that you should make sure that you trade a market that is clear, or you look for a market that is clear. When I'm talking about a market that is clear, I'm talking about a market that when you just open your chart, you will see that okay, this market is just smoothly moving in an uptrend. Or let's say for an example of this of Bitcoin, you can see that Bitcoin is moving just smoothly going upwards, and you can see you can understand the structure. How is the price behaving? You can see that okay, Bitcoin doesn't give me pullback. when it enters in a range, it means that a pullback. For an example, here and even here, you know that when you see something like this, it's a buying opportunity. Even now, if you can see something like this, you will know that it's a buying opportunity without even waiting, without even seeking much confirmation, because it is just clearly flowing all the way up. You see, so don't open a chart or don't select a trade that will confuse you. You need to make sure that the trade that you are selecting, it is a trade that is clear. The market is just showing you clearly that, okay, the market is doing this, the market is doing this. You do not have any confusion. I hope that that is making sense. Another thing that will help you to select good trades, guys, it is to make sure that you always check what is happening with the news. We know that we are technical traders, but me, before I even trade, I make sure that I check the news. I make sure that before I just open my trading view to analyze my chart, I make sure that everything that has to do with the news, I know what is going on, because the news, they really move the market. For an example, yesterday we were trading gold. We were trading gold and Aussie USD. So what I did is that, okay, I checked the calendar and there were very significant news. There was significant news. I think it was around 2 p.m. So when we opened the trade before, I knew that the price is going to move significantly. But I was waiting that, okay, let it move significantly on our favor. Fortunately, it moved significantly on our favor and we made a lot of pips from that. So you have to be friends with the calendar. Don't just say, me, I'm a technical trader. Let me tell you the secret. Do you know great moves in the market? A lot of movement, they are a result of news. Even long-term move. If you can see a trend moving maybe for a long period of time, if you can trace what is the reason behind the trend, you can find that maybe it is economic news, but it is that we do not care about it. We just think that economic news, they just bring a big candle in the 1 minute. Even big moves, they are because of economic news. I hope it is making sense, guys. I hope we are still together. So make sure that when it comes to your trading, be careful on how you select trades. Be careful. Make sure that you select a trade. Okay, if you know that it is going to be hard for you to anticipate what the news are going to do in the market, make sure that you stay away from a pair that is having economic news. And another thing that I want to tell you guys, it is you have to be careful of currency crosses or currency correlation. You see, that's why I remember in one particular webinar, that's where I showed you about currency correlation, on how I looked at my currency pairs window by window to see the strength of a pair and to see pairs which are moving in the same direction. So you need to be careful about that. For an example, you see, let me make an example of USD card and oil. I'm just making this example. You see, oil, it is a commodity, and Canadian dollar, it is a commodity currency. Oil is a commodity and the Canadian dollar, it is a commodity currency. So it is a commodity currency that is linked with oil, you see. And in most of the cases, when oil is going up, the CAD or the Canadian dollar will also go up. You see, when the oil is going down, the Canadian dollar will also go down. So now you find yourself as a trader, you are buying oil, and you are also buying USD card, which means you are like canceling, the trades are canceling each other, because when you buy USD card, it's like you are selling card and you bought oil. So meaning the buy on oil and the sell on card, it will cancel each other. You will not make money at the end of the day. So you have to be careful of things like that. When you open a trade of USD JPY, there is no reason to open a trade of USD CHF, because even them, in most of the cases, they move like almost the same. So there is no need to open an opposite trade, because you will not make money at the end of the day. What will save you, it is only just risk reward, that okay, I lost $3 and in this one I made $6, meaning the net it is $3. So it is a loss in that way. Make sure that you trade things that don't link. You see, you can buy Bitcoin and you can sell Japanese yen, it doesn't link. You can buy gold and you can sell the New Zealand card, it does the New Zealand dollar, it doesn't link. So those are things that you need to look at when you are selecting your trades. Avoid trades that will cancel each other. And the other important thing, before I just allow you guys to recommend something that we can speak about. And the other important thing, guys, before you select a trade, that's why when I started this webinar, I spoke about timing. You see, let me make an example of this chart here. You see, to be honest with you guys, I wanted to buy Bitcoin today. But unfortunately, okay, I saw it, where was it? I think it was yesterday, when it was somewhere around here. And okay, I say, okay, I will just wait for it to show me signs of going up, you see. And it indeed showed me signs of going up. But today, I only checked the chart and it was here. The reason I didn't buy it here, it is because it was close to this level here. You see, it was in this level. So I said, okay, I can't buy it now. And then the next moment where I saw it, it is now where I'm seeing it here, up there. And I cannot buy it even now. Why? Because it is already overstretched. So if it is stretched, it is likely to pull back and continue to be stretched. So why am I doing this? Someone can say, Bitcoin is going up. Let me buy it. You know that it is late. When you buy here, where is your stop loss? The right level for stop loss, it is down here. You see, if you put it here, you don't give the price a breathing space, because you know that stop loss, they say stop loss should be on the previous low, what. You see, so buying here, it is just buying from pressure. And there is something that I noticed. Okay, I've been trying to, in the previous days, I've been trying to sign up with a certain broker, like Hot Forex. There were assets that I wanted to trade on Hot Forex. I actually wanted to trade as stocks, so binary.com doesn't offer it. So when I signed up with them, before I can even finish the application, I downloaded their app, and on their app I noticed something which is fun. When the price move, they tell you that, okay, for an example, if maybe Bitcoin will fall 70 pips, they will tell you that, okay, Bitcoin have fallen 70 pips. And when it rises 130 pips, they will tell you that Bitcoin is just rise 130 pips. So what I saw about this, it is a trick. Although they are giving you true result, but they are actually raising emotions inside you that Bitcoin has just rise 130 pips in 1 hour, let me go and buy it. Then the moment you buy it, it is already overstretched, it is already overbought. When you just enter your buy, boom, the trade just collapse against you. You see, because have you ever seen traders seeing a big candle coming in and they say, wow, if I don't buy now, I will not have that Ferrari. If I don't buy now, I will not have that Lamborghini. You find yourself buying because of emotions. So let us be careful about trades which have already played out. Make sure that you find a trade before the setup have played. For an example, in the example of gold, do you know that already I know in gold that I'm waiting for a pullback like this? You see, I am now ready for the trade before even it plays out. You see, so you also have to be ready for trades before they play out. Don't say that once you find gold pulling back and going up, you say now I'm buying here. You are already late. You see, you are already late. So make sure that you are in time, guys. Make sure that you do not panic. Don't be deceived by big candles. If a signal is given here, you see this big candle coming in, you need to know that it's already very dangerous. It's already very dangerous. You see, although you can say, wow, if I bought here, I would have made all these pips, and you think of buying even now, which is not good. Make sure that you are in time. Once you find a trade which have already played out, know that it is now useless. Just stay away from the trade. Wait for another opportunity. Don't be under pressure to take trades, guys. Don't be under pressure to take trades. You see, for an example, you see, last week we made 92% and we only took 10 trades in a week. And today we took only one trade in the allied community, and we made a lot of money. It's not about how many trades you open, it's about quality. Choose the right trade, select good trade, high quality trades. So let us, you can ask anything, guys. You can ask. If you have a question, you can ask. Anyone with a question? Guys, any question before I just, because you then ask a lot of questions when we are left with 2 minutes. Any question? Okay, someone is saying it is clear so far. Okay, someone said we want to raise fund for trading. Oh, guys, those who send private messages, okay, you should just post them publicly. You can send them to me only when it is private, but if it's just a normal question, you can post it publicly so that everyone can refer. I'm definitely joining before end of next week, but I will take to you. Okay, no problem. Say Chab. Want to raise fund, okay. Is gold affected by NFP? Okay. Gold NFP. Okay, you just challenged me because I never ever paid any attention based on gold and NFP. But what I can tell you is that the answer is yes. Gold is affected by NFP. Why am I saying yes? It is because it is gold over USD. So NFP, you know what it does even to the dollar. So if it is gold over USD, obviously NFP will play a role there. So gold is affected by NFP. Next time, can you please explain the moving average crossover? Okay, I will explain it next time, as you say. But I thought I explained it in that video, but I appreciate the information, the informative session, sir. Thanks. Okay, Musa, thank you too. What I can say is that, okay, I've noticed a lot of people who are lazy. There are people who can just watch a video on YouTube. They can watch 1 minute, and after that, because they see a WhatsApp link on the description, they go to you and say, please explain the strategy, what. Yet I just made a video about it, meaning people don't watch the videos. But I'm not referring to you, Tsep. I'm just reminding me of some people. Okay, guys, it seems like there are no questions. Let me just give you a last important tip. so that we can have a good night. So let me just think of something that I can really give you. Okay, I have noticed something. I've noticed something in my trading. In my trading, when I opened my account, you see, there are things that we really don't pay attention to as traders. We think that they are not really useful. See, for an example, when it comes to leverage, I've been just tracing how my account behave and everything, and then when I looked at this is not a normal behavior of a trading account. When I tried to figure out what wrong did I figure out that I placed the leverage very high, and it affected my trading very significantly. You see, finding out that when I set maybe my stop loss, I will not lose the amount that I thought I was going to lose. I will find the market behaving in a very active manner when it comes to generating the losses and the profits. You see, although it's a good thing in the side of profit, however, we should not just think only based on profits. We should also think only based on the losses. Okay, I will explain it most. I will explain it. Slippage. Okay, we are left with 10 minutes, but it's enough time. So I figured out that it's a thing that is affecting us as traders, because when we lose a lot of money, because when you open the account, we only think on the side of profits. Yet we have to be really sure that when we go to trade, we are going to experience losses. That thing, we should be open about it, and we should be happy about it, that I will trade, I'm expecting a win and a loss. However, you should use a strategy that has an edge, that will give you an edge. For an example, pure price action. Pure price action, it is almost 70% accurate, meaning if you know price action, 70% of the time you'll be accurate. You see, so then if you have price action and you do not make money, then the problem is maybe with the risk management, the problem is with emotion, the problem is with your mindset. You see, so I figured out that thing, that things like leverage, you just don't care about it. Things about all these things that you set up when you open your account, you don't care about it. And okay, when it comes to slippage, okay, slippage is basically a problem which is on the broker's side. It is the brokers that need to just really improve their operation, because slippage is like, okay, I'm saying I want to buy gold here, and when I try to buy gold here, I find my trades being opened here there. Basically, slippage, it is not a problem of spread, guys. It is not spread. Spread is another issue. But slippage, it is actually, slippage can be because of delay. Maybe you wanted to open here, and maybe it took like 10 seconds to activate your trade, and it activates your trades up there. You are now buying in an expensive price than a cheap price. It is slippage, something like this. Slippage can be caused because of poor broker management. Maybe there are a lot of the broker is overcrowded with traders. There are a lot of people who are placing trade, so the system that activates our trade, it is very slow, so it can cause slippage. You see, so it is things that has to do with brokers, and you should also stay away from brokers which love to give us big spreads. We should stay away from them. So any question before we close? Tax and traders in South Africa, that's a topic I don't hear about. Okay, me, I'm in Swaziland, and there is nothing that has to do with taxes. There is nowhere where I'm taxed or what, but I don't know about South Africa. Which type of account is better from IC market? It is a standard account. I I don't use IC market, but I once used it when I began trading, but it is a standard account. A standard account. But if you don't have money, I hear people saying that the what micro account, and I've been seeing people trading those things. If you don't have enough money, you can open it, because guys, the important the best perspective of trading, it is to look this as investing. That's why trading, it is called investing. It is us who just termed it trading, but it is truly investing. So you should look at it in that perspective of investing. So if you invest, you know that investing is not to buy a Ferrari in a day, but it is to buy a Ferrari maybe in 10 years. So the focus becomes the focus is on the long run, not on the now. So even if you don't have money, okay, I prefer trading with a cent account or a micro account with $30 than going to trade volatility index with $30. See, I know it's something which is not good, flowing good to other people here, but it is very safe. It is very safe, because in a cent account you can trade with $30 and you can risk $1. And if you risk $1, it means that you have 30 chances to trade. But when it comes to volatility index, you only have one chance. If you lose that trade, it's over with your account. So if your money is not enough, stay away from highly volatile assets like Nasdaq, Bitcoin, gold, or DEX30. So just trade the currencies, guys. And when your money is good, trade those active assets. Don't depend much on luck. So I hope it is making sense. It is making sense. Yeah, those who want to join the community, guys, the gates are still open. I will open it as long as I can. The gates are still open. And yeah, okay, I think if we don't have a question, okay, anyone who can recommend a topic that we'll discuss next time. A topic for next time. Topic for next time. Let me hear what you want to learn. What do you want to learn? What do you want to learn? Okay, Peter is saying price action. How much do you recommend for Nasdaq? Okay. How much can I recommend? But okay. Those who have asked me some questions like that on my inbox. What I can tell you is that, okay, for every asset, the first thing that I look, it is that for an example, when it comes to me, my general stop loss is like 30 pips. That's a stop loss that I'm striving for. It is 30 pips, but if it's not 30 pips, if it is big, I will have to decrease my lot size. So what I consider before I give you a recommended amount, it is actually the risk. How much can you risk in one trade? Like for an example of 30, let me make an example of 30 pips. You see that, okay, 30 pips of a currency pair in 0.01, it can give you like less than $2 or $3. Then when it comes to Nasdaq, for example, let me say 30 pips of Nasdaq in the smallest pip, in the smallest lot size, I mean, it can give you like somewhere around $80, you see. So if it is something like that, $8, let me just do calculations for you. Then I multiply that $8 by 10, you see, because I believe that if you can have 10 trading opportunities, you cannot lose the whole 10 trading opportunities. Remember, we have a 70% edge as price action traders, you see. So if you have 10 chances, you know that 7 chances are going to be correct. So the minimum amount you can trade with, if you will apply proper risk management, I can tell you that, okay, even $80 you can trade with it, if you will make sure that in a single trade you do not lose more than $8. Same applied to those who want to trade volatility. I recommend $80 intentionally. I recommend a small amount intentional. I want you guys to teach yourself how to apply risk. The minimum $80, not more than $80 in one trade. And what will save you, it is being strict when it comes to your rewards. Be very strict. If you know that your stop loss is $8, don't allow your profits to be $5. Only you can allow this only if the price really is against you, if the price is moving against you. But if the price is flowing, you are just closing $5 because you are afraid that what if it will go down to the negative side and I lose everything? No, it doesn't work like that. If you risk 8, make sure that you take 16. Be strict in this. Take 16. When the price reaches +8, lock your profit. Lock your profit that, okay, if the price will go against me before it reaches 16, let at least cut me at +8. You see? Meaning if it doesn't reach $16, let me take 8 at least, not less than 8, because I risk 8 as well. So if you take less than 8, it means that your risk reward is negative. You will not make money. So be strict on your reward. If you risk 1% to make 3%, be strict on that 3%. Don't take less than that. Don't take less than that. You rather take small losses than to take small profits.